Hi, I'm attorney JJ Childers, and I'd like to welcome you to this latest lesson in our series, Savvy Startup. In this particular lesson, what we're going to be talking about is choosing your legal structure. I know, I can tell you're thrilled to death, you're excited because there's nothing better than choosing a legal structure. Well, actually, this is going to be something that's very important and something you need to know about because you're going to be pouring your blood, sweat, tears, investing a lot of money, a lot of time, a lot of effort, a lot of energy into operating your business. So you want to make sure that you have it set up correctly so that you can maximize your tax deductions, so that you know your assets are protected, and you know that you can continue by focusing on the task at hand and don't worry about all of these legal issues. So the only way to do that is to gain an understanding. And that's what our objective is here in this particular lesson. Now, fact is, we're going to begin by taking a look at a quick overview of where it is that we're going. Now, when we talk about choosing your legal structure, the first thing that I tell people whenever I'm speaking to my clients, whether it's in my office or if I'm at an event or let's just say I'm on the phone, it doesn't matter. I always tell people, first of all, you have to know what are your options? Because unless we know what options are available to us and knowing a little bit about those options so that we can make a good decision, we're not going to be able to move forward and implement things the way they need to be implemented. So it's vitally important that you understand these options and you understand a little bit about them. That's exactly what we're going to be doing here in this lesson. First of all, let's take a look. What are the options? Well, I'm going to put all these up here at the same time so you can take a look at these. Basically, I'm just going to list them out and then we're going to go into them in basically in more detail so that we can give you a little more information so that you can make a better informed decision. Now, first of all, we have the sole proprietorships. That is basically something that we're going to talk about that you need to know about. It's going to seem like it's very positive, but there are also some negatives. Then we're going to get into partnerships. And I would say the exact same thing about partnerships that I say about sole proprietorships. There can be some very good advantages, but there are some pretty significant disadvantages as well. And you need to know both of those in order to make that good decision. And then we're going to get into our limited liability options. Those are going to be things such as corporations, and that's whether it's a C corporation or an S corporation, and we'll talk about that, or maybe limited liability companies. So we've got to understand with limited liability companies, we've got a lot of different options. So the best way to do this is take a look at the key considerations in each one of these options. And I want to look at these individually so that you are able to gain the information that you need and access the strategies that you may be able to utilize, but also some of the upsides, the downsides, the strengths, the weaknesses, so that way you know what is available for you and you can make sure you implement the one that works best for you. So let's go ahead and begin taking a look at sole proprietorships. Now, first thing I want to say, now, whether we're talking about sole proprietorships or any other one of our options, I always tell people that I get it. I understand. Chances are this is not the most exciting portion of the overall business experience. And that makes sense because you were so excited. The reason you started your business was not so that you could choose a legal structure. You started your business because you have something to offer to the world and you want to make money by doing it. Well, choosing the right legal structure can help you with that. Sometimes people put it off and they say, well, you know what? I just don't want to choose a legal structure. Well, here's something very important that I need to share with you. If you don't choose your legal structure will be chosen for you. That's right. The government will determine automatically how you are structured if you fail to take action and structure yourself and make that choice. You know, one of my favorite bands is Rush, and one of my favorite songs that says, if you choose not to decide, you still have made a choice. Well, that's exactly what's happening here. You may choose not to make a choice with regard to your business structure. Well, you still made a choice. That is to accept what the government tells you you have to do. Well, no place is that better illustrated than when we talk about sole proprietorships. So let's do a quick overview. When we talk about sole proprietorships, first thing I want you to understand is that it is far and away the easiest business structure to set up. And I would say it's the cheapest to set up as well. Now, notice those words right there, cheapest to set up, because there's a big difference between cheapest overall and cheapest to set up. Now, when I say it's the cheapest and I say it's the easiest, What I want you to recognize here is that if you do nothing and it's just you for your business, and when I say just you, I mean just you as the owner of the business. You may have hired an employee or maybe hired some contractors, but if it's your business and it's just one person, then by default, you are a sole proprietorship. Now, I want to touch on that word default for just a moment. When I say by default, that means through no action of your own, just automatically. If you fail to take action, then automatically you are a sole proprietorship. Well, the way I look at this from a default standpoint is as a lawyer, I'm familiar with a concept called a default judgment. And it may be something you're familiar with, but if not, let's kind of delve into it for just a moment. A default judgment basically means somebody has sued you and you just didn't show up. And because you didn't show up, the court had no choice but to enter a judgment against you because you defaulted by not even showing up. That's a default judgment. In sports, we call that a forfeit. And you know what? It doesn't matter if you can see that you are clearly the better team. We'll never know because you failed to show up. Because you failed to show up, you just have to accept the outcome. And that outcome is that you lose. Well, it doesn't matter if you go back after the fact and try to change it. It's all to no avail. It's the exact same thing when we're talking about a sole proprietorship, because by default, you're automatically the sole proprietorship, which may not sound so bad at first because it's very cheap to set up. It's very easy. It's very easy to operate. There's really not a whole lot that you have to do. However, let's talk about some of the downsides. First of all, liability. Obviously, as a lawyer, especially a lawyer that deals with asset protection, I'm going to talk to you about limiting your liability. Here's the challenge with a sole proprietorship. You get absolutely zero liability protection. Now, I know when I use words like liability protection, sometimes people say, okay, what does that mean? Well, by liability protection, what we're talking about in particular here is that in the event that your business is sued for some reason, and you got to understand that we live in a very litigious society, which by litigious, I mean there are a lot of lawsuits being filed. So it's not a matter of if you'll be sued. Chances are it's a matter of when. Because, we've always heard that there are, two things that can be said to be certain in life, and those is death and taxes. Well, to that, I would add conflict. Anytime you've got two or more people, there is the possibility of conflict. Again, sometimes it's not a matter of if there will be conflict. It's just a matter of when that conflict will arise. Well, that conflict between maybe you and your customers, you and a client, that is what gives rise to a potential lawsuit. Well, if you have a sole proprietorship and you are sued, you have zero asset protection, zero limited liability. Because in some types of business structures, and we'll be talking about this, your liability is limited to what's in the company. Well, the sole proprietorship does not give you that limited liability, which means if you are sued for your business, and let's just say that you lose and a judgment's rendered against you, not only can they take the assets from your business, they can come after your personal assets, the money in your bank accounts, the money in your kids' college funds. They can come after everything. Well, when I say it's the cheapest to set up, and I say there's a big difference, it's because in the long run, that doesn't sound very cheap to me. That means you stand to lose everything, not just everything in your business, but everything in your entire life. So you've got to make sure that you have liability protection. So a sole proprietorship is not going to be a good option for you. Again, I say by default, you will automatically be this way. It's the easiest, it's the cheapest to set up. Who made it that way? Well, that's the government. The government made it very easy for you to put all of your entire lifetime of savings at risk. Don't do this. Don't take advantage of this. I wouldn't really even say take advantage of this. What I would say is, you know what? This is the cheap, easy way out. You're not setting up a business because you want to do things cheap and easy. You want to make sure that you do things properly, appropriately. Safeguard yourself, safeguard your family. A sole proprietorship is not going to be an option from a liability standpoint. Okay, well then let's take a look at our next point, and that is taxation. From a taxation standpoint, certain entities will get, we've always heard about corporate tax advantages. We've heard about, different business deductions, things like that. Sure, you will have access to business deductions, but they're going to be somewhat limited. With a sole proprietorship, basically, you file that with your personal tax return. So it's just going to be filed on a separate schedule. So you're not going to get the same tax benefits that you may be able to get with our other types of options. So that's something you want to factor in. All of the income that you generate is going to be subject to FICA. FICA is that Medicare and Social Security tax, which basically means the employer pays the Medicare and Social Security tax, the FICA, that's 7.65%. And then the employee pays it. Well, if you're a sole proprietorship, guess what? You're self-employed. You're both the employer and the employee, so you're going to pay both sides of that FICA. So there's not a whole lot you can do to get around it with that sole proprietorship. So from a taxation standpoint, again, I would say no. Liability, that's not going to pass the test there. From a taxation standpoint, it's not going to pass the test. Well, why on earth would somebody want to have a sole proprietorship? Well, our next point is maintenance. From a maintenance standpoint, you couldn't get much easier, or I guess I could say better than the sole proprietorship if what you're looking for is just ease of use without having to keep a whole lot of meetings. You don't have to have meetings or minutes of meetings or resolutions or anything. Basically, there's not a whole lot of paperwork involved with the sole proprietorship. Of course, if you want to deduct certain things, you've got to document that. You've got to keep good records. But from a maintenance standpoint, hey, if all you care about is making things as easy as possible for you, well, maybe a sole proprietorship is an option. I would strongly advise against that option because of the liability that you have and because of the lack of access to tremendous tax deductions that are available with other things. So this is really what you want to consider. What's most important to you? Is it the liability protection? Is it the tax aspect of making sure that you're able to deduct more? Is it the maintenance? Or when you factor all of these into the overall consideration, maybe the sole proprietorship is not going to be your answer. Again, I always tell people steer clear of sole proprietorships. You may be asking them, why do we just spend our time talking about that? Because again, you need to have a good understanding of the options that are available to you when you're making your decision. That's why I want to make sure that you understand what is at risk with that sole proprietorship. Sometimes people say, well, somebody told me that don't set up an entity all at once, wait until later. Well, why would you wait? Sometimes the biggest thing that you can get going for yourself when it comes to starting a business is building momentum. And then all of a sudden you're going to start building that momentum and then you get sued, bam, all of a sudden you're stopped dead in your tracks because now you have to deal with a lawsuit and now your life savings at risk. Don't do it. Long and short of it, sole proprietorship, sure, now you understand it, and you should understand primarily why you don't want to have it. Well, now that leads us to our next option. The next option is partnerships. Now, I work with a lot of different real estate investors, and I work with a lot of people that do, shall we say, joint ventures. Well, with a joint venture, what I mean by that is basically it's two or more people that have decided that they're going to pool their resources, pool their efforts, or maybe they just do that venture together where they say, okay, in real estate, a lot of times it works like this. Somebody has learned how to do real estate deals. They just don't have any access to capital. And then you've got somebody else that has plenty of capital that they'd like to get a better return on. So they say, okay, let me partner up with somebody that's got this, basically this knowledge, this training, these skills on how to invest in real estate, but they don't have the capital that, to implement it. Well, this is basically a marriage made in heaven, seemingly, because you think, hey, I need money, they need expertise. Let's basically combine forces and we'll do this together. You've now created a general partnership. Now, when we talk about a general partnership, basically, you remember what we just talked about in sole proprietorships. I said by default, you are automatically a sole proprietorship. So essentially, giving you this overview right now, with partnership, you are automatically going to be treated this way if it's two or more of you, if you don't make a decision. Just like we talked about with sole proprietorships, if you choose not to decide, you still have made a choice. So you will be a partnership. Here's where it's even, I don't know, I might even say more dangerous. Fact is, I would definitely say more dangerous than a sole proprietorship. And the reason is, when you have a general partnership, not only do you have personal liability for everything in that business, you also have liability not only if somebody sues you and says that you did something wrong, but if your partner does something wrong. So let's say you're doing a real estate deal and you're in business with this partner. Your partner goes over to check on the property, check on the project, and maybe they've been drinking too much and they do something that causes an injury to somebody else, and that somebody else says, hey, you were at the job site, you were there on behalf of your business, you now caused some sort of damages, we're going to sue you. But they're also suing the partnership itself. So you may have been 1,000 miles away, but it doesn't matter because your partner did something to give rise to that liability, that lawsuit. Now your personal assets are at risk. That's right. Not just what you invested in the business. See, people mistakenly think, you know what, maybe I have limited liability protection. So if we're talking about liability, from a limited liability standpoint, there is no limitation on your liability when it comes to a partnership. Sometimes people mistakenly believe that there is because they say, you know what, sure, I'm willing to risk 50,000, or I'm willing to risk 100,000, whatever it may be. You can add as many zeros or take away as many zeros as you like. But the reality is people mistakenly believe that their liability is limited, and sadly, it's not. They have unlimited liability. And if you think about this, they may go after your partner, and your partner may say, well, hey, I don't want you to be on the hook for stupid things that I did, mistakes that I may have made. But the challenge is they don't have any money. If they had money to pay this judgment, they wouldn't have needed you in the first place to partner with them in this business or in this deal. So from a liability standpoint, a general partnership is absolutely terrible, destructive. I mean, it is dangerous. So again, I guess I would say from this standpoint, from a liability standpoint, don't have a partnership. Well, then why would people have one? Well, from a taxation standpoint, the great thing about a partnership is similar to a sole proprietorship, you're going to get to deduct business expenses. So under Section 162 of the tax code, all ordinary and necessary business expenses are deductible. Well, that's wonderful. And we're going to talk about that in a tax lesson as part of the overall Savvy Startup series. But for now, just understand that, hey, when you have a business, you have now availed yourself to tremendous tax deductions that are unavailable for individuals, for people that do things personally. Welcome to the business world. That is a tremendous benefit. From a taxation standpoint, essentially, the partnership itself is not going to pay taxes. The income will pass through to the partners. This is what's called partnership taxation. And the partners pay taxes in their individual tax brackets with their personal tax returns. So from a tax standpoint, this could be somewhat beneficial. Fact is, partnership taxation is going to be very beneficial. So if we are kind of assessing this option from a liability standpoint, absolutely not. We don't want it. Taxation, well, we like it. However, I would tell you, this is my personal professional opinion, is that those tax benefits do not outweigh the liability. Yes, we like partnership taxation, but let's get it maybe from a limited partnership. We could set up a limited partnership where now we have limited liability protection, but that's something that we're going to address later on when we talk about limited liability companies, because limited liability companies have essentially done exactly that, where they have had basically the structure that we put in place for a limited partnership. The challenge with a limited partnership is that it has to have a general partner. Well, the general partner has personal liability. So again, we haven't limited our liability fully. We've got to utilize a limited liability company for that. And we'll be talking about it in just a moment. Now, with this general partnership from a maintenance standpoint, just like the sole proprietorship, there's not going to really be anything. There's no filings with the state. There's no business filings, that because you're not forming any sort of a business entity, by default, you're automatically this type. So we've got to make sure we understand that. So maintenance wise, this may seem like a good option, but again, that liability, because it's so dangerous, this is something we're probably going to want to avoid. So if we consider everything that we've talked about thus far, think about you as an individual, because the reality is I can speak sometimes in generalities, but you may know individually what is your risk tolerance threshold. When it comes to putting all of your assets and all of your family's assets at risk, I would just tell you that should be probably your most important consideration when it comes to thinking about maybe having a partnership. don't do it. Don't have this partnership because it's just simply too dangerous. Again, why are we covering this if it's something I'm telling you not to do? Because I firmly believe you need to know what are the various options. Even if some of those options are bad, you need to understand, here, I thought about that, I considered it, I studied it, I did my due diligence, and I opted against that partnership. All right, so now let's talk about some things that we actually may want to do. Well, our next option is corporations. Now, for many people, they think to themselves when they just hear the word corporation, they're thinking about these colossal, multinational global organizations that are operating businesses worldwide. And they start thinking, well, a corporation, I can't imagine that that's for me. Well, actually, it is for you. It can be for you. Let's take a look at some of this. First of all, let's do an overview. Many times when I speak to groups, one of the things that when I'm talking about corporations, I'll pull up the legal definition. And the legal definition actually mentions that this is a new legal entity. It's a legal person. Now, I love that because now we've established a new legal person in the eyes of the law. So when we're thinking about maybe liability, you recall with a sole proprietorship, we had zero limited liability. With a partnership, zero limited liability. With a corporation, now we have limited our liability just to what's held in that corporation. Because back to that definition, if this is a new legal person in the eyes of the law, now this legal person can hold assets, can hold bank accounts, they file their own tax return. So now this way, in the event that that corporation is operating your business and your business is sued, that means your liability is limited just to what's in the corporation. Now, that may not sound ideal, but let's tell you why it's actually good. It's good because now that liability is limited just to those assets in the corporation. It's not your personal assets. Your personal assets are still safeguarded against that liability. So that's a tremendous benefit for you. But we now have to make sure that we understand, hey, that means the business is still completely exposed and we stand to lose everything that's in that business. That's okay, however, because we've protected ourselves from personal liability. Now, in a future lesson in this overall series, we're going to talk about how to put together an overall asset protection plan that may incorporate, we may have a limited liability company, we may have a corporation, and that may be a C corporation, that may be an S corporation. Well, now is probably a good time for me to address, what is a C corporation? What is an S corporation? Well, that all has to do with taxation. Now, typically when you set up a corporation, that is a separate standalone entity and it pays its own taxes. It's going to file a separate tax return than you file individually. We may file a 1040, it's going to file an 1120. Now that 1120 is going to be its own tax return. It pays its own taxes. It has its own tax brackets. And there are tremendous benefits and tremendous tax deductions that are available for corporations that are not available to just any other type of entity. So that's going to be a benefit. One illustration is having a corporate qualified pension plan. So we can establish a corporate qualified pension plan and sock aside a lot more money into that type of plan than we can maybe with other plans. So that's one of the benefits here. But you'll notice that I've put S corporation status. Sometimes people say, do I need a C corporation or do I need an S corporation? Well, the reality is you may need both. But let's take a look at what is the difference. If you set up a corporation, automatically by default, it is going to be a C corporation, which means it pays its own taxes in its own separate tax return, its own separate tax bracket. Now, the benefit there is that it's separate from you, but the disadvantage, and this is something that any tax accountant will share with you, and probably anyone you talk to a whole lot about different types of business structure from a tax standpoint, they're going to tell you one of the downsides about a C corporation is that it's subject to double taxation. And the reason for that is that because the corporation pays its own taxes, if you want to pull money out, typically you're going to do that maybe in the form of a dividend. So if you do that, you're pulling money after the corporation has already paid tax. Now you pull money to yourself. You file that for dividend income in your personal tax return. So now you're going to be taxed in your personal tax bracket for that income. Well, see, when I say double taxation, the corporation paid taxes on it, and now you're paying taxes on it. So that's double taxation. Well, I dispute this sometimes because I say, well, what if you took a salary? The salary would be completely deductible to the corporation, and now it's taxable to you. Downside is because you're receiving that, the corporation is going to have to pay the FICA taxes on that for the employer's half, and then you're going to pay it on your part for the other half. The beauty of an S corporation is that you're able to avoid the FICA tax. So let's think about that. I mentioned earlier that I said, FICA is our Medicare and Social Security tax. Well, if you're able to save having to pay that, and those two components add up to 7.65%. So the employer pays 7.65% and the employee pays 7.65%. Well, 7.65 times 2 is 15.3%. So even if, let's just say, I'm going to be very conservative here, and let's just say you had $50,000 of income. Even on $50,000 of income, 15.3% is $7,650. Wow. Think about that. If you can change the nature of your income from earned to unearned income, or you can change it to where rather than it being paid through other entities, now you have that S corporation that's helping you to avoid that FICA tax. Even on $50,000 of income, you're saving yourself $7,650. Oh, and by the way, that's each and every year. Pretty good benefit here. So from a tax standpoint, corporations can be incredible. Well, depending upon what type of activity you're involved with, you may choose to have an S corporation, because if you're involved with something that's generating earned income and you need to change that earned income from earned to unearned income, this can save you a tremendous amount of money. So far, when we're considering corporations, the liability is excellent. And by liability, I mean our protection from liability. Second, we're talking about taxation. Excellent. So is this a good option? Well, it certainly is. But what about maintenance? Well, that's where corporations kind of get a bad rap. With corporations, we started off by taking a look at this of saying anytime people hear about a corporation, they're thinking about some, huge, gargantuan, multinational global organization in many instances. And they think, well, I'm not at that corporation level yet. Well, regardless, even if you set up a small corporation, you still have to have meetings. Legal required meetings, such as one meeting a year of the directors, and then you have to have at least one meeting a year of the shareholders. Even if this is you, if it's you are the only person and you set up a corporation for yourself, you still have to have a meeting of the shareholders, which that's you. So basically it's a meeting with yourself. And then you have to have a separate meeting with the directors. Well, if it's just you as part of your corporation, guess what? You're going to need to hold another meeting, and that's again just with you. So you may be spending a lot of time with yourself, by yourself. Well, guess what? Any expenses associated with those meetings are deductible. Now, at those meetings, basically you're filling out forms because you've got to vote on certain things. Now, once you do it the first time, basically the next years will be much easier. But just keep in mind that these are certain things you're going to have to do. You're going to have to pass, you're going to have to keep minutes of those meetings. You're going to have to pass resolutions to authorize certain actions and certain behaviors that are able to be essentially carried out by the officers and directors. So from a maintenance standpoint, it's much more difficult with a corporation than it is with the sole proprietorship or the partnerships. However, it's well worth it because of the liability protection and the tax benefits that you get. Especially, these can be very easy. If it's just you, or if it's a very small corporation, you can get template documents that can be filled out very easily. You just have to maintain them in your corporate records. And we're going to be talking about corporate records in a different lesson, and we're going to talk about the different types of agreements and documentation that we need to be keeping up with. But for now, just suffice it to say, corporation is going to have more work, but let me assure you, it's well worth it. Now, when you're factoring in all the considerations, I promise you, the limited liability protection that you're able to get, the tax benefits that you're able to get, all of the tremendous, think about it, with a corporation, you've got corporate lobbyists that are lobbying Congress on your behalf. Now, you may think about it, you're like, how on earth am I going to hire a lobbyist? Well, you don't have to. There are other corporations out there that are getting laws passed that benefit corporations. If you're a corporation, you get that same benefit. So if I were to give this a grade as far as, or at least a recommendation, this one's going to have a thumbs up. The first two, thumbs down. This one, absolute thumbs up. Well, now let's take a look at our next option, and that is the limited liability company. Now, this is what's referred to as an LLC. Undoubtedly, you've heard the term LLC, so let me give you a quick overview. One of the things that I mentioned when we talked about partnerships was that we could have something called a limited partnership. And as I covered earlier when we talked about partnerships, I told you limited partnerships could be a good option. The downside is you have to have a general partner. And now that general partner has personal liability. Well, years ago when I first started teaching this, I mean, it's almost, it's been decades that I've been teaching these strategies and working with people. Limited liability companies were brand new. We actually would tell people you don't want to have a limited liability company because it wasn't time tested, it wasn't proven. And at that time, not all 50 states had authorized, limited liability company acts in their books and with the laws through the legislature. Well, that is no longer the case. Now, all 50 states have LLC acts on their books, and we've got a greater track record. We've got greater case law. It's more time tested and proven. So now it's something, obviously, we feel quite confident providing recommendations and guidance and advice and assistance in setting up limited liability companies, LLCs. Now, a quick overview with that limited partnership that I mentioned. I said the downside is that the general partner has personal liability. Well, what we would do is we would say, okay, then fine, we'll name a corporation as the general partner. The downside on that was that requires two entities. Because there were two different legal entities involved, that means there's two sets of fees involved. There's two sets of records involved. There's two annual filing fees. There's two tax returns that are involved. So everything, it kind of doubled up. Well, basically what happened was with limited liability companies, we essentially said, you know what, you can set this up and there's going to be limited liability, not just for the limited partners as it is in a limited partnership. No, there's limited liability not only for the members of the LLC, but also for the manager of the LLC. And sometimes people will set up an LLC where the members are the managers. Sometimes they'll set it up with a separate manager. Well, there are different reasons why you might do that, whether it's an internal manager or whether it's maybe an external manager with another one of your legal entities. Again, something we'll get into in a different lesson, but it's something to factor in. So basically, the LLC is tremendously flexible. Let's take a look from a liability standpoint, how this is going to work. Well, as the name tells you, it gives us limited liability. Well, what that means, and this is important, limited liability, your liability is limited to what's in this company. So if we're looking to protect our personal assets because we say, hey, there's enough risk involved in starting a business, we don't want to compound that risk or, exacerbate it in any way that we don't have to. We want to just make sure that we have this mitigated as greatly as we possibly can. So when we have that limited liability company, if we understand that the liability is limited to the company, okay, the downside is the liability is limited to the entire company. So that doesn't seem very limited in many instances. Well, you may ultimately spin off additional LLCs. Maybe you've got a lot of times we'll do multiple entities because we have multiple needs for different protection for different assets, different activities, and maybe even real estate that's involved with the business. But I have a saying, and I'm going to share this with you right now. You might want to, if you're taking notes on this, write this down. The saying is this: don't go into it, grow into it. I'm going to say that again. Don't go into it, grow into it. Now, what I mean by that is that you may ultimately want to have many, many LLCs because you have many, many activities going on or many, many assets involved in this. Well, there's no need to set up all of those LLCs from the get-go. No, you want to grow with your business. And as your business grows, you want that structure to grow along with you. So I just point that out from a liability standpoint to say you may need multiple LLCs at some point, but at an absolute minimum, it's a good idea to start with one. So from just the liability standpoint, we give this a thumbs up as well. Well, now let's take a look at taxation. Now, when it comes to LLC taxation, there's no such thing. Now, let me explain myself here because you may be thinking, no such thing as taxation. Heck, I want one of these. Well, no, what I mean by there's no such thing as LLC taxation is that there is no way to be taxed as an LLC. As an LLC, you elect how you want to be taxed. And here are your options. By default, if it's one person, you are a single member LLC. Well, if you're a single member LLC, you're going to be taxed as what's called a disregarded entity. From a tax standpoint, it's as if you didn't set up an entity. Basically, you're going to be taxed like you were with the sole proprietorship, where it's not a separate tax return. You just basically file this as a separate schedule with your personal tax return. Okay, well, that's one option. If there are two or more members of that LLC, then by default, you are taxed as a partnership. And again, to cover what we've already gone over, partnership taxation means the partnership doesn't pay taxes. It passes through to the partners, and then they file those taxes on their personal return. But that's after all of the deductions were taken on behalf of that partnership. So you've already had tremendous tax benefits. And then when it's passed through to you, now you file it on your personal tax return. And when it's passed through as a partnership, if it's a passive activity, that avoids that FICA. So you got that benefit as well. Now, here's another option that we have from a taxation standpoint. With an LLC, we can elect to be taxed as a corporation. So you file that, I believe it's Form 8832 with the IRS when you're getting your employer identification number to illustrate this as a separate legal entity. And we've covered that in separate lessons in this series. But we also can file to choose to be taxed as a corporation. Well, what that means is that, yes, you have an LLC, but from a tax standpoint, they're going to treat you the way we just talked about with regard to corporations. And then you can take a further step and say, okay, I'd like to elect S corporation status. So then you would file, it's going to be Form 2553. And I know I'm getting into the grass a little bit on this, so don't worry about that. We're going to talk about that in other videos. So I just want to cover it so you'll have that at least at the front of your mind. So when you're making your decision from a tax standpoint, you can think about this. So you're going to file that S corp election. So now your LLC can be taxed as an S corporation. Well, when I'm talking to clients or people that are seeking my advice, a lot of times I'll ask them, I'll say, now, what do you have for this entity from a legal structure? And they'll say, oh, I've got an S corporation. And then I look at the name of their company, and it will be, I'm just making up, XYZ LLC. Well, I say, well, hold on. I thought you told me that you had an S corporation. Well, they didn't have an S corporation. They had an LLC that had elected to be taxed as an S corporation. The net result from a tax standpoint is the same thing, but from a legal standpoint, we've got to understand that, no, that is a limited liability company. So when we look at this from a maintenance standpoint, people will often advocate LLCs because they say, hey, you don't have to worry about keeping all the documentation that you have to keep when you have a corporation. Well, to me, I say it's better to have it and not need it than need it and not have it. Let me show you what I mean here. Why do we want to, when I say when you may need it? Well, in the event that you're audited, it would be nice to have documentation to substantiate the decisions that you've made, to support everything that you've done. Well, that's the maintenance that needs to be involved. Sometimes people say, you don't have to keep those records. Well, you're going to need to keep tax receipts. You're going to need to keep documentation from a tax standpoint. But from a legal standpoint, you still want to basically keep some sort of a record of what did you do, why did you do it, and that can all be done by having those meetings and then keeping minutes of those meetings. Here's the other benefit here. As I mentioned earlier, all of those meetings can be deductible. So there's nowhere that says you have to have your meeting locally. You may have your meeting in a different location. You may say, you know what, I want to go to Vegas to hold my meeting. I want to go down to Florida to have my meeting. I want to go, I want to go to Malibu for my meeting, whatever it may be. As long as it's reasonable, you can't just say, okay, well, I've decided, for my company, I've decided I'm going to fly to Fiji for this meeting. Well, maybe someday, right now, that's not going to be the best option when you're just getting started because that may not be deemed reasonable. But from a maintenance standpoint, I would tell you, limited liability companies, technically don't have the same requirements that corporations do, but because it's pretty easy, do it. Just make sure you keep the maintenance the same way you would with your corporation. So from a consideration standpoint, basically, we're talking about liability, LLC, thumbs up. Taxation, LLC, thumbs up. Maintenance, LLC, thumbs up. Now, does this mean that I'm telling you need an LLC out of all of our options? Not necessarily. The best move is to talk with a qualified professional and say, okay, these are the things that I am considering. These are the things that are important to me. This is the type of business that I have, because that may determine how much liability protection you need. And it may be that you need a bigger, better structure right from the very beginning. All of these things have to be factored in. So let's take a quick summary. What have we talked about? We've talked about considering our options. The reality is we can't make an informed decision unless we have the proper information. So our options, we went over those: the sole proprietorship, the partnerships, the corporations, the limited liability companies. Those are our options. Now you have a better understanding of that. We've got to determine our liability preference. Do we want to have significant liability protection? I would say yes. Granted, that's me as an attorney, but part of that is because I want to make sure that your business succeeds. And we want to give it every chance possible. So making sure you have liability protection in place is going to be paramount. Next thing is taxation determination. How do we want to be taxed? Do we want to be subject to FICA, which there could be some benefits to that, because sometimes that means that now we have a salary and we can demonstrate if we're looking to borrow money. There can be some benefits. We also have some circumstances where you can fund a retirement plan a little greater, but these are all things that have to be factored in. So you've got to determine that tax preference as far as how you want to be taxed. And then we talked about maintenance concerns. From a maintenance standpoint, hey, the greater protection you want, the greater maintenance that you're going to have to keep. I promise you it's worth it. It doesn't have to be difficult, but it is going to be different. And finally, what other considerations? We talked about, how do I want things to be handled? Do I want to put this in place? Do I want to make sure that I have access to a broader array of tax deductions, basically setting up tax deferred types of retirement plans that we can sock aside larger amounts? These are all things that need to be factored in. Okay, everyone, that wraps up another wonderful lesson in this Savvy Startup series. I hope you learned some great information. I'm going to be here again, JJ Childers, attorney with Advanced Tax Group. We're here to help you make the right decisions. We can help you to implement these entities into your overall plan. And we're just doing our part to make sure that you have what you need to do things as effectively and efficiently as possible. I'll see you in other videos with the rest of our team here at Savvy Startup, and I look forward to helping you cover your assets.